Good morning, traders. Hopefully everyone had a good weekend. Taking a look at the charts, we can see here the SP 500 futures on the 30-minute chart. Obviously, we had a trend reversal on the momentum chart, and we've got a little bit of volatility, which is to be expected. We had the Fed, we had the market become it became overbought several times. Lots of FOMO, people moving in, and very big so on the Fed day, last trading session. So we've seen this market really kind of chop around. Now it is a little bit overbought. It is at the upper end of its range here at resistance. I wouldn't be surprised if we see some type of pause or pullback, maybe even to the lower end of this range to try to shake things up a little bit. Again, the market is still trying to digest the news, the Fed talking about, I think it was pretty bleak on the future. I didn't listen to it, but also talking about how rates are going to start to come down. Don't know how much, but I figure it'll be small. They're going to start little. There's no way. I don't think they're going to do some huge. Some people are saying a 1%, but that's just, I think that's ludicrous. That just shows huge fear on their side, but who knows? We'll see. Overall, market is, when we look at the daily chart, when we get rid of the 30-minute and look at the daily chart, we are above this blue line, this 5-day moving average. We tagged it and we had a big pop there with the Fed, and we'll see if this is a high momentum move. This is a very strong move, a quick little pause, and we could have another big run to the upside and break free and catch a lot of people off guard. There's a huge wall of worry, and I think the markets love to go up when people aren't on board. A lot of people are betting on falling pricing, and they're expecting the market to top, which we are too long term. But in the short term, if the trend is up and the technicals are strong, we want to be in the market. Now, from a short term standpoint, the market is strong. We are long the markets. From a longer term standpoint, we talked about this a few times in our mentoring sessions. This scenario that we have right here, especially this type of pullback, is very similar to this scenario. So we just need to see if this market is going to get some legs and extend. I'm hoping we're going to see this continue to push up, but the underlying strength of the market over here is the same as we have right now. Definitely struggling. It has broken down and it has not strengthened really that much, believe it or not, from a long-term perspective. So still very nervous about the overall market. I don't think there's a whole lot of upside left. Maybe we push to new highs and hit a target or so on some of our positions, but overall, I'm questioning this move because there's a lot of damage done. And our shorter term chart shows us. If we look at the NASDAQ, you can see our sentiment chart here. The last time we had a big pullback, there was a little bit of deep red, but it was orange and very short-lived and took off again. This time around, it was deep red and red for a lot. There was a lot of damage. So think of it as a big wound in the markets. So there was a lot of damage done. Now it has turned green again, but overall, we'll have to see how this market reacts. The large caps like the tech are not really recovering so much. It's really the small caps that are benefiting. If we look at the Russell 2000, we'll pull up the futures. Russell 2000, huge pop, up 3.5%, up almost 0.75% again today. So a lot of the smaller sectors, you look at like regional banks like KRE, the smaller companies all exploded higher. Simply, I think a lot of people moved into the markets as a risk on play, chasing this, which we can see with our FOMO indicator. People just piled in. And so small cap stocks that have low liquidity, they move up the most because they're smaller markets. And when everybody piles into the same plays, it drives the price very quickly. So going to be very interesting to see how things unfold. But overall, things are looking good. All of our positions continue to be higher other than our NASDAQ position, which is relatively flat. But all other 4 positions are in the money and looking to open even higher again today. So we continue to ride this market up as we let this the overall trend continue to kind of mature here. TLT, if we take a look at bonds, they continue to kind of grind their way higher, stuck underneath this emotional high where everybody thought the Fed was going to do something and then they didn't. And we're back up to that level. Now we know the Fed is going to eventually do something, although we already knew they're going to do something eventually. But again, markets are emotional. People who just thrive off news and bet and guess on what the news is going to be, creates all of this noise. It's just a bunch of emotional traders, the markets. And that's why we just kind of look for the overall tide. Is the tide going up, going down? And we have many ways to filter that on a weekly chart and on our more active CGS strategy or asset revesting strategy of what the herd are doing. And we usually end up taking the opposite positions. Anyways, if we take a look where money is flowing today, it's moving into stocks, a little bit out of bonds. We are seeing gold up about 0.5% this morning. Same with silver. So gold is in striking distance of hitting new all-time highs again, continues to kind of grind its way up. It's got a beautiful bull flag pattern. It's moving up here. I think it could pop and really explode to that 1650 to 1750 range. That is kind of the measured move on multiple time frames, multiple different price patterns. So that is definitely going to be a resistance area once we get into that zone, that $100 zone. 2,700 being like right smack dab in the middle of it, and it's a whole number. Like 2,700 will act as a resistance area naturally just because of the number itself. If we take a look over at silver, up about almost 0.75%. It's having a nice rebound. Now, it hasn't really broken out of the pattern. Obviously, we got a big run up. We got an A, B, C. Definitely some cleansing, lots of fear and panic. And if this can get out of this large consolidation, we could see silver at 34, 36. And it can happen pretty quick. As we have seen here, it takes a week or two, and we can see some pretty massive moves in silver from the lows to the highs. This was a 24% move in roughly 2 weeks. So silver plays catch up very quickly if this has some legs behind it, and we see stocks like miners, silver, gold, if they all want to break free here, this is the time I think it favors for them to do that, but hasn't quite broken out just yet. Gold, and if we take a look at miners like GDX, GDX pushing up to new all-time highs. Again, we are long GDX, and we're going to let this market, this is a high momentum play, shows that it's got some good potential to really pop and expand quite a bit on the upside still here on the chart. Other than that, that's about it at this point. Let's take a look at some of the sectors. Home builders, again, these smaller companies and more fast-moving stocks have very big explosive moves last week. Real estate had a big move as well. We've been talking about that in our videos. We'll just get rid of this here. Really start to expand and take off. People moving into real estate, home builders. So we've definitely seen a lot of moves to the upside, and we've got a lot of short-term uptrends. This was all red about a week and a half ago, 2 weeks ago. Everything was longer-term bearish, shorter-term bearish. People weren't willing to, they were risk off. People weren't willing to dump their money into the markets and try and make money. And now things have completely turned around, and lots of triggers to the upside. Lots of things are up quite significantly over the last few trading sessions. Anyways, that's it for now. Talk to you soon. Bye-bye.